Ladies and gentlemen, good day and welcome to Mech Projects Limited Q2 FY24 earnings conference call hosted by Nirmal Bang, Institutional Equities Private Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being now recorded. I now hand the conference over to Mr. Prashil Gandhi from Nirmal Bang Equities for the opening remarks.
Thank you, Rohit, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes you all to 2Q FY24 earnings conference call for Mech Projects Limited. From the management team today, we have S.K. Ramaya sir, Director Business Development, and Jamie Satish sir, CFO. I now hand over the call to management for opening remarks, post which we can take Q&A from the participants. Thank you, and over to you, sir.
Yeah, thank you, Prashil. Hi all, this is Satish. Good afternoon and best wishes to all. Hope you all had good Diwali. I have with me Mr. S.K. Ramaya, Director Business Development, and C.H. Koteya, GM Finance. Mech had one more great quarter with good set of numbers and execution. There is no change in overall plan set for Mech. Execution and ongoing business plan is in line with our projections and internal set targets. We are happy to see more and more opportunities coming in our core sector for projects, a combination of new and old plants getting revived. Moreover, we are also too excited to see plenty of opportunities coming in the operation and maintenance, both in the domestic as well as international market. This year, we will see a large order book addition coming from O&M space from various projects in pipeline which are in advanced stage, and orders from O&M during the year going to be all-time high in the journey of 24 years. For Mech, we are seeing quarterly execution bandwidth going up quarter on quarter. Going forward, we'll see the numbers going up significantly. In any financial year of Mech, execution during quarter 3 and quarter 4 contributes substantially higher as compared to quarter 1 and quarter 2. Therefore, we'll see quarterly execution cycle improving significantly for the rest of the quarter of financial year FY24. Coming to quarter 2 and H1 numbers, the reported total income for quarter 2 FY24 is rupees 937 crores and the EBITDA is 118 crores and PAT is rupees 51 crores. During quarter 2 of last financial year, the reported total income was 774 crores and EBITDA was 89.5 crores and PAT was 44 crores. So on a quarter-to-quarter basis, Mech has demonstrated almost like 21% growth on the top line, and with the growth of top line, EBITDA has gone up almost by 32% and PAT has gone by 17%. The revenue mix for quarter 2 FY24 is as follows. Mechanical business has contributed 148 crores. Civil business, including railway, water distribution, 496 crores. O&M 272 crores and electrical business close to 17 crores and others close to 5 crores. Whereas during last year FY23 quarter 2, the contribution for erection business was 161 crores, civil 367 crores and O&M it was 226 crores and electrical 17 crores and others was 3 crores. O&M and civil has shown a growth of almost like 20% and 30% respectively. Erection more or less remains flat, but however this number again will go up significantly going forward. Electrical, consciously, we are not bidding for new projects, therefore it's more or less flat. And coming to the H1 of FY24, the total income was close to 1,808 crores, and the PAT and EBITDA is 223 crores, and PAT is almost 102 crores. Whereas last year, H1, the total income was 1,523 crores, EBITDA was 175 crores, and PAT was 83 crores. There is a growth of almost like 19% for H1 as compared to last year, and with the growth of the top line, EBITDA has significantly gone up by almost 27%, and PAT has gone up by almost 23%. Similarly, O&M and civil business has gone up by 17% and 33% respectively. Mechanical, there's a dip of 8%, but however, it will continue to grow Q3, Q4, and electrical business, it's coming down because not much order booking is happening on the electrical business. This year we'll see significant contribution coming from the water business because the order book is quite healthy. O&M continues to be the backbone of the company, contributing almost like 27 to 28%, and during the end it will continue more or less the same percentage. FY24, because of the healthy order book, water business will continue to contribute close to 20-25% of the total business, and O&M will continue to be 25% plus, and the mechanical will continue, both domestic and international will contribute almost like 18% plus, and railway is again picking up with adding of the metro. This year it is expected to be almost like 4%. And we'll see that FY25, FY26, there will be significant change in the business mix because water, because of healthy order book, the contribution is going to be almost like 18-20% next 1.5 years. And erection business is expected to go up almost to 25 to 26%. And the railway is expected to go up to 7%. And MDO, this year will start with a small number, and this is expected to go up significantly next 2 years. FY25 is expected to be almost like 8%, and FY26 going to be almost like 16%. So there will be significant change in the business mix because of the increase in the O&M pie and MDO business. Improvement is also seen in overall margin profile, and same is further expected to improve gradually, and on reaching MDO to peak during FY26, the margin profile will improve to a greater extent. Depreciation cost as a percentage remained lower side due on account of controlled capex spending, and the finance cost, keeping aside interest on tax impact as a percentage to revenue, remained lower side and continued to control on account of improved working capital and cash flow. As you all know, with respect to such operations conducted by the Income Tax Department under Section 132 of the Income Tax Act 1961 during July 2022, based on the deliberations with the assessing officer and as a prudent measure and to avoid any further protracted litigations, the company has made provision of 16 crores for the assessment years 18 and 19. The company has made all the required information available to the department so far. With better deployment of capital, improvement in margins, we have also seen improvement in ROC, and this is expected to again go up significantly. As stated in our earlier calls too, The overall execution bandwidth is seen increasing quarter-on-quarter on account of various initiatives and strong increase in in-house resources. The company is well set to execute projects now in the range of 200 crores to 1800 crores per quarter. And other developments include the operating cash flow for the period is almost positive by 70 crores, and the system generated free cash flow of almost 50 crores plus during the period, which is quite healthy. We are working on the same to improve further. Also, the average monthly collection of the company continued to be healthy. More importantly, the net current days, excluding cash and cash equivalent, has substantially improved on account of improved working capital cycle, change in business mix, and change in customer concentration. Net current days have come down to in the range of 130 to 135 days, and on stabilization of the MDO business from FY25 and 26 onward, we can expect significant improvement in net working capital days, and this can help the system generate larger operating and free cash flow. We can see quantum jump in free cash flow. More importantly, the gross debt and net debt remained controlled despite growth in the business and the order book. As on 30th September 2023, the gross debt is close to 450 crores and the net debt stands at 226 crores. But if we see as on today, we can proudly say that Power Mech is a net debt-free company. And the debt-equity ratio as on 30th September stands at 0.3, which has significantly come down because of the improvement in the cash flow. But if you see, net debt today is nil because the net debt is almost zero. Coming to these two MDO projects, lot of developments and ground activities are happening, both the projects. The first project, Kotre Basanpur, a stage 1 forest clearance we got in September, November, from the government we got in November. Environmental clearance also we have got it. Now the project is ready to start now because EC and FC were the major milestones which we achieved now. And we have applied for the consent to establish. This is expected to be next 1 month. Therefore, we can start the ground activity from this year itself. And coming to the second project, initial site establishment of mining activities already completed by October. And more importantly, the heavy equipment, which are very important to start the excavation. We have started the procurement and transporting the equipment, and these equipments are expected to reach the site maybe next 1 week to 10 days. And the core drilling activities already started during the 3rd of November. And the EC consultant, Ms. Vardhan Environnet, we have finalized for the washery. Apart from that, the electrical connection, for 1.46 MB allotment along with the demand note received for JVBNL during October. R&R colony fencing work already started. Apart from that, the mining area fencing work already started. So we are expecting next 1 week the Bhumi Puja. Therefore, we can start the excavation work maybe during end of this month itself. Therefore, we would see the revenue picking up from this financial year itself. Coming to the order book, order backlog as on 30th September is around 53,100 crores with both the MDOs, and excluding the MDOs, the backlog is almost 13,400 crores. Similarly, the order book backlog as on today is around 53,500 crores with both the MDOs, and excluding the MDO, it stands at 13,750 crores. For the entire year, FY23-24, the company has set a target of 10,000 crores, and we keep the target as it is. We are confident of reaching this number, including the orders which we have received up to date 1,800 crores, plus the projects which are in pipeline and in L1 status, close to 1,800 crores. We have identified opportunity size of around 46,000 crores plus. We are also expecting good amount of order booking and execution cycle at international market too. During FY24, large order intake is expected from the power sector, both in the O&M, mechanical and civil construction. As we stated earlier, the focus will continue to be going forward consolidation and leveraging the growth, and the focus will continue on industrial plants, operational maintenance, railway and metro, water, to some extent road, and MDO projects. The execution cycle during FY24, 25, and 26 is going to be robust and healthy on account of improved order book backlog and targeted projects in pipeline, and more importantly, increased bandwidth in the execution cycle per month and per quarter. As projected, margin profile has been improving and expected to improve further gradually year on year. Our plan to build business model to have a recurring long-term service model income to the tune of 3,000 to 3,500 crores plus, in combination of O&M plus MDO for sustainable long-term growth from FY26 is possible. This model will help us in a bigger way to improve margin profile, working capital cycle, and in a large extent improve the free cash flow. Power Mech is well set to demonstrate execution and conversion in the range of 34% to 35% of its opening order book in a year. In addition to that, revenue from MDO business as per ramping up coking coal production plant. Going forward, O&M and MDO business will drive substantial growth in a significant way. And we have some more developments from the business side. I'll request Mr. Ramay to add, please.
Yeah. Thanks, everybody. Good afternoon to everybody. Thanks for this. Remarks on the various numbers built out. Yeah, as Satish has said, the outlook continues to be bright because the trigger for that is the massive investments the government sector is spending in all the areas, energy sector, infrastructure, and then the drinking water schemes, water systems, and railways, and the metros. I think that is what is going to, the company is going to be aligned with this business. And of course, O&M, there is a lot of revival it's seen. And as per the numbers are there, what Satish has spelled out, the segment-wise numbers are the ETC and mechanical portion. The present backlog is about 7,052 crores compared to 6,878 crores at the beginning of the year. Then the civil component of the work is 6,074 crores against 6,136 crores. The O&M is 353 crores also 600 crores. Of course, we have to add certain numbers which will come up now. Then electrical, it is 255 crores against 118 crores. And then MDO is a major component of our business with about 39,732 crores of backlog with both the MDOs. That should take us to a very healthy backlog in the near term, 2 to 3 years, or the long term, say 25 years. Looking at the MDO side, 53,111 crores as on September end, as on today it is 53,500. Now, when we look at the opportunities, what we can see is that there seems to be a substantial revival of the power sector market. This is mainly driven by the apprehension of the load mismatch which may happen in the couple of years between the coal side power generation and the non-coal side, that is the renewable power. If the present renewable capacity is about 1,25,000 megawatts, and with the total installed base of 411,000 megawatts and all, there is going to be further augmentation of the renewable power as the years go by, and that's why government has taken some remedial actions in terms of fast-tracking the investments in new projects. And the present indications are that apart from the NTPC, which is planned, which has already ordered LARA for BHL, and other projects are going to be in pipeline like Seepat, Daripalli, Singroli, Maija, Ramgundam, Patrasu also. Then the GenCos, the generation companies, they are having a plan of about 10,500 megawatts. That is going to substantially come up. Recently, government has approved the Yamunanagar project also. And looking at these projects, the expected capacity addition which will come up in the next couple of years should be about 23,300 megawatts. These are all the new projects, what I am trying to say. And then there is a revival of the projects about the first tranche of the projects of 5,270 megawatts has already been taken action at many of the projects. And we have already taken some initiative in taking the orders there with Vedanta and also with Monnet Ispat. Now, government has asked recently, a policy ministry has been directed by the Power Ministry, saying that another 5,500 megawatts of stuck projects, that also has to be revived, and it has prodded the state government undertakings also to participate in these bids so that it is revived. Therefore, the revival of nearly 10,000 plus megawatts plus the new addition of 23,000 megawatts, that should give a very good outlook for the power sector growth. And in terms our business is quite aligned with that in terms of the 9-plant installation work, erection, testing, commissioning, O&M jobs and all. Therefore, that is one aspect on the new units and also the revival of the old units. I said about 10,000 plus megawatts. Then the O&M opportunities has triggered substantially. Recently, I have seen that 2 major jobs we have taken. Indus Jaipur comprehensive O&M about 229 crores, 6 years O&M contracts. It is a very important breakthrough. The two in a mining and metal sector, non-power sector, we have taken it. And then Raichur 2 into 600 megawatt, 163 crores. And then Adani at Mundra, we have taken about 100 crores of jobs at various O&M packages. Now, the opportunities which we are tracking in terms of new plants which are coming up with this Purja 2 into 660 megawatt, Ghatampur 3 into 660 megawatt, North Chennai possibly 1 into 800 megawatt, and then Buxar, of course, as the commissioning comes near to that. Then there is a major project in Balco with Vedanta Group, that also we are having a look at it. Therefore, all these opportunities, the ballpark figure of opportunities in terms of the VTG installation plus the civil and CHP, which is our core strength now, because coal handling also, material handling is one of our core strengths, we established it. It comes to about 12,000 crores of opportunities with these new projects coming up. Then the revival of the old projects also, it can add up to another 4,000 to 5,000 crores. In all, it can be anywhere reach between 17,000 to 20,000 crores of opportunities, both with the addition of the new capacities and also the revival of the old projects where half-completed jobs are to be taken up. And there, the execution, fast-track execution necessity is there, and the Power is the preferred bidder for that, like you have seen in the case of Vedanta Group for the it's a Singapore job. And recently we have clinched one more major order with BHL for the Talcher, 354 crores on the main part equipment associated work and civil works also. Therefore, with that type of initiative, this will continue to play in the coming months and coming quarters also. Now, coming to the other water-related projects, we have substantially identified a huge opportunity, particularly in the Madhya Pradesh, then in Karnataka, Tamil Nadu, then Madhya Pradesh also I said. Therefore, with all these projects, the total opportunity is about 18,000 crores. And Madhya Pradesh itself is planning about 9,000 crores in various schemes of drinking water, AmRut schemes, urban water requirement schemes for various towns and cities, sewage treatment plants, etc. And with our fast-track execution expertise, what we have developed in UP for the drinking water schemes, perhaps we are well qualified for many of these jobs. And then wherever it is required, we can have a tie-up with the other parties also, like micro irrigation, district irrigation, and those type of schemes also are coming in a big way. And that should help us. The various segments of these water systems are the sewage treatment plants, urban renewal schemes and the AmRut scheme, then water supply schemes, lift irrigation schemes, canal work, and then of course the most important is the Jal Jeevan Mission, which is a flagship initiative of the Government of India. It is heartening to know that almost 70% of the rural villages are well connected now, and we are doing pretty well in the what we are doing at drinking water schemes in UP for about 4 major areas, nearly about 2,800 crores, 750 to 800 crores. And almost 35% of the work we have completed. So that gives us a lot of reference base and expertise, because the type of organization is what we established there is a distributed organization system. That means down the line, a grassroots level distribution organization system, village level, the area level, and then the block level, the district level, and the zone level. Therefore, it is a well-structured organization. Nearly about 4,000 people are working, and already about 100 villages we have completed the 100% water supply schemes, and then water is flowing into those villages, and the people are seeing the benefits. And what is more important is the organization what we established, about 4,000 people with engineers, supervisors, field, and all the working staff, subcontracting staff. That should give us a strong base in undertaking many of the important water projects, drinking water projects, etc. also. Then one more thing, important thing which has come recently is that as we formed up these contract agreements with the Jal Jeevan Mission scheme with the UP government, finally it has been, the numbers are out in terms of the operation and maintenance scope of the work. Earlier, it was only a general feature involved in the LOI, but now they formed up those figures in terms of operation maintenance, because as we complete the execution of these projects village-wise, it is estimated 3% of the capital cost will come for the O&M over the 10 years with escalation provision. And the present estimation is that the numbers have been given by the UP government for about 681 crores. And this we have not considered in our order book so far. And that will get figured out now. And of course, another 3 to 6 months, we started opening of that O&M front also once more and more villages come on the front line. Now, this is on the drinking water and water systems. And then, of course, in the railway scene, we have seen the experience what we are gaining in Bangalore, Telangana, 427 crores. And then we are doing about 14 railway projects worth of 1,500 crores, apart from including that BMRC job. And that is giving us, and recently we have taken some jobs from the railways, and then Raebareli we have taken an infrastructure facility for the Vande Bharat infrastructure facility. And then we are working with Mumbai also. We have taken built some jobs also. Therefore, these opportunities will keep coming, and the railways and then metro together, offers huge opportunities in terms of railway infrastructure, in maintenance depots, workshops, repair shops, and then revamping of the stations and all those things. And that also a good feature is that now the organization is in place to execute these jobs. I think that is one of the features of PowerMech. We are continuously building up the organization capacity in wherever we are diversified, and we want to sustain those type of organizations for long-term growth and all. And of course, wherever there are viable projects are there in the railway, in the road sector also, we will do it. For example, the Telangana job, what we have taken from Adani, the EPC job, we almost completed 70%. That is a very fast progress, what we can say we have achieved it. And then other two projects also, we have done nearly about 60% of the job in Mizoram and then Karnataka also. So for this background of these road projects, the railway projects will give us good background. And then the new initiative is going to come up in West Africa and Nigeria, Ghana, Tanzania, and other places apart from the Middle East. There are some new projects are expected to come with 4,000 to 5,000 megawatts in the Middle East, Saudi Arabia, then UAE and all. And already we have got an organization there. About as on today, 1,600 people are working in the Middle East and then West Africa and all. So that organization setup also will continue to help us to see that the new jobs we can take it and implement it also. Therefore, as Satish has rightly said, there is a substantial opportunity in the market as part of the national infrastructure pipeline. This is in the fourth year of its implementation, third or fourth year of the implementation of another 1 lakh crore. And many of the organizations who can catch up with that, they are benefited, including us. And we have been greatly benefited by this investment from the government side. And then private sector investments also will come up in the steel sector, then mining sector, and then coal side. And then Coal India is coming with first wave connectivity around 50 projects with investment of 20,000 crores. Therefore, there are plenty of opportunities. We have to select the right technology, right partnership wherever is required for the association where we don't have that in some of the new areas. And then the implementation mechanism has to be stabilized with the learning what we have achieved it. And one of the features I can mention is that why our margins can improve further is the learning curve we are undergoing it. And without much addition in the capacities and manpower, and also the equipment base what we are having, if you see the turnover is continuously growing up year after year. And that is a good feature of our operation. And with that, better margins can be driven down the line. And then with more opportunities coming, perhaps we'll also get better margins in the market. So this is what I have to say. We can go further for the interactions on the questions and answers.
Yeah. Prashil, thanks for giving the opportunity. We can move forward to the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratiksha Dastari from Equitatis Investment. Please go ahead.
Thank you for the opportunity. My first question is related to the tax provision that you mentioned. If you could just repeat the number, what is the provision that you've taken because of the search?
Yeah, we have provided for almost 16 crores, madam. This is including some of the interest component on this tax. So put together 16 crores we have provided for.
Okay, and this is full provision, right? We wouldn't anticipate any further provision because of this going ahead.
Yeah, see, what they have done is they have completed for some of the assessment years. So we don't expect some bigger amount to come. Okay, maybe next 2 quarters we'll see that this 100% this issue gets resolved. Therefore, the provision may remain more or less slightly lesser than what we have provided for. However, having said that, we have got almost like refund of 40-45 crores plus. So in terms of cash flow, there is no impact. But however, it will have some impact in terms of the provision part.
Understood. And in terms of O&M, so we've almost done 500 crores of revenue in the first half. Just wanted to know what is the target that we have for this year? What kind of growth are we anticipating as compared to FY23 for O&M?
O&M this year probably will be touching close to 1150 to 1180 crores. That is the target. Probably this will continue to remain almost like 25 to 25.5% of our total business this year.
Okay, understood. And what would be the monthly collection run rate right now?
This is picking up, Pratiksha. It's almost like it's ranging now 350 to 400 crores. And see, normally like Q1 and Q2, historically it's like 35%, okay, 35% plus of our total business. But however, Q3, Q4, there will be a significant quantum jump. So we're expecting this number to pick up from probably Q3 December onwards. And I'm seeing that this number should cross 400, 450 crores gradually.
Okay, understood. And so, we had about 3,000 crore plus orders from water segment. So just wanted to know what is the execution guidance in terms of FY24 for water projects?
For water project?
Yeah.
Yeah. See, if water, this will play significant pie this year because the order book is significant. Maybe if all goes well, FY24, we are expecting close to 900 crores. That is the number at lower side. And it may go up to 1,000, 1,050 at the higher side.
Okay. All right. Okay. And our interest cost for this quarter has gone up significantly. Is this because of bank guarantees or something? Because the debt numbers haven't grown into push.
Honestly speaking, the finance cost remained controlled. As stated, like there is some impact of interest cost on account of IT. So the provision of 16 crores also includes some portion of the interest. So because of that, there is an increase of almost 3.5 to 4 crores. Otherwise, if you exclude that, the finance cost remains flat.
Okay.
Yeah. So this is it's not a recurring item. It's like almost like a one-time. So water maybe will close this year so that there is no ambiguity carried on this fund. Okay. So probably you'll see that this number coming down because if you see the net debt as of today is almost like debt-free. I don't see this number to shoot up.
Okay. Understood. Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 to ask questions. The next question is from the line of Arun Subramaniam from Ampersand. Please go ahead.
Yeah, so my question is that what kind of order inflow that you are targeting non-MDO in this current financial year?
Sir, we have kept a target of almost like 10,000 crores, so we are not changing the target. So we did close to 1,800 crores of addition up to date. On top of that, the projects which are L1, it's almost like 1,800 crores plus. And we are expecting good amount of additions coming from the power plant, both in the O&M, civil, also the mechanical pie. This put together, we're expecting close to 4,500 crores. Therefore, we'll have a combination of orders coming from power plant, okay, both the old and new plants. And O&M, this year we may cross 2,500 to 3,000 crores of addition. And on top of that, we're also targeting close to 1,500 crores of projects relating to water. Apart from that, if all goes well, railway and metro, we may add close to 800 to 850 crores. And other civil and international put together, we're planning 10,000 crores.
Understood. Sir, what would have been the reason for the first half order inflow being a little slow, and what will really change going forward?
The first half, we were working more towards this domestic side, mostly on the power sector and some of the railway apart from the road projects, okay. Of course, so O&M, it's been almost like finalized stage, okay. But however, in terms of awarding, it took slightly longer time. Apart from that, some of the state selection code and all, okay. Some spillover maybe there probably in during December and all, okay. So more importantly, what is important that the negotiation part, okay, it's almost done now. Okay, we could see that conversion happening next 30-35 days. So maybe December and January, that's where we'll see huge number coming in. And apart from that, road projects, we have seen that the tenders getting postponed a couple of times. Okay, of course, this is close to 800 to 950 crore. That's what we were expecting. And in Chennai, there was a bit of slow in terms of discussions and negotiation. Now that part we have already completed. Apart from this, the Vedanta, it took slightly longer time. But of course, the order conversion started happening. Apart from that, we're also talking some of the O&M projects with Vedanta and BHL also. Probably we'll see that normally historically, if you see like the conversion first half, okay, historically less, but second half is more, even in terms of execution or the order inflow also.
Yeah, I think what Satish says is that, right. See, what is happening also, of course, these elections, these aspects of elections, most of these centers are out, that is where our confidence comes from the point that, there are identified projects are there, then drinking water, power side, railways, and then roads also. And then international trade also is there. Therefore, the opportunity size is substantial as the inquiries are coming. There is no dearth of the inquiry. It's a question of selecting the right combination of these products, projects, for its execution and our fitting there. And then, seeing that, we select the correct projects and also proper execution. And that is one of the things, perhaps, the first off is always because of rainy season and then many of the clearances and issues, they may take more time to firm up all those things. And in case of drinking water and water system, what has happened, this is the last phase of the ordering. Perhaps they have to do last that one maybe also. Therefore, they are now trying to complete that exercise. That is where, there are about 18 to 20,000 crores of opportunities. And the new power projects, because Lara has been awarded, there was a delay in awarding it also. Now it will come up. Talcher has already taken action and all. Now the renewal of the projects, what has happened in Atharna, we have seen the benefits of that, and more of opportunities will be there in that also. And the second phase of the renewal of the old projects, another 5,500 megawatts, once it happens, also more opportunities will come. Maybe a little bit of adjustment is there in time lag and all. But overall opportunity-wise, there is no dearth of it in the domestic market. Certainly, we are very bullish on that in all these segments and all. And railways, in fact, if you look at the track record of 14 projects, what we are doing, and the metro projects, what we have taken, there are also a lot of huge opportunities are there. And we are into that, many of those things. And the usual cycle time, once it happens, actually, we will be able to close it by third and fourth quarter in more sound way.
So if you can just call out that out of your total order backlog, are there any kind of slow-moving projects like which are slower than your anticipation, and if at all things are going to be improving on that front?
Sir, can you repeat? Sorry.
Yeah, sorry, there was a lot of disturbance.
Yeah, some disturbance.
So I just want to know that of the order backlog that you have, will you like to call out any slow-moving projects which are like getting little delayed compared to what you had thought of, including the one which you had received, the big one that you had received received last year? Is there any slow-moving project, and is that going to be improving sometime soon?
No, there are no projects which are old, okay, or suspended. It's all our ongoing projects. Okay, the plan is intact. Of course, there was some schedule changes in terms of the ordering and all, but there is no change in the plan, overall plan.
Understood. Thanks a lot, sir.
Yeah, thank you, sir.
Thank you. A reminder to participants that you may press star and 1 to ask questions. The next question is from the line of Prashil Gandhi from Nirmal Bang Institutional Equities. Please go ahead.
Hi, sir. Thank you for the opportunity. A couple of questions from my end. First, could you update us on the status of our FGD order and the potential revenue booking that will take place over next few quarters?
Yeah, madam. The initial things for issues for recording the layouts and engineering certain types are required in that most probably. And now the engineering orders are placed, and then there is going to be a tracking on that with a few projects. For example, 2 to 525 megawatt, we are taking action on that, and that should be around roughly around 800 crores. That took shape now on a priority basis, and then the others also should follow. Because FGD, if you look per se, what is happening is that the major interest in that for fast-track implementation is to some extent is fitting the system into the limited space and the technology selection and the fitting of that. And as on today, if you see 12,000 megawatts, about 10,000 megawatts are in the capacity addition on the FGD side out of 68,000 megawatts identified. But ordering has been done about 105,000. Therefore, in most of the things, there is a general amount of little bit lag is there initially because of the finalization engineering, layout issues and all. And of course, the other side also, there can be some issues related to fixing the tariff also, downstream side with the discoms and electricity boards also. And that is where, the government is also little bit giving the leeway for them to implement it, but they are very firm on that. And now, for all the projects, the latest update is that government has extended the deadline up to 2027. That is overall the entire country's requirement. But where the ordering has been done, the usual contractual schedules will be there, barring the issues related to engineering pickups and then the layout issues finalized, all the access availability and those type of things.
Yeah. So, probably in terms of revenue booking, Prashil, like FY24, maybe quarter 3, quarter 4. Okay, quarter 3 we may expect 50 to 100 crores. Maybe quarter 4 it may go up to 250 to 300 crores. And FY25 maybe in the range of 1,000 to 1,200 crores, or it may go up slightly by another 200 to 250 crores. Okay. This is the plan what we have got now. Okay, we will have more updates. Probably quarter 3 will take end of the quarter 3 or maybe beginning of quarter 4. We'll see the scheduling part and if something can be improved in FY25.
Sure, sir. So secondly, on your margins, we are seeing your margins jump significantly by 90 basis on a YOY basis. So would we expect this first, what would be the reasons the same? And second, would we expect further margin improvements? So what do you think will be the sustainable margins going ahead? Can we assume a 13% or 14% kind of margins?
See, we had the first plan is to see that the old project mix comes down. Okay, therefore our cost towards the royalty, which is impacting straight into our EBITDA margins, that should come down, and that is happening. So there is a natural mix change because of rebuilding the PQs in-house directly. So to some extent and to a larger extent, that is helping us to push the margins. So the first plan is to get back to our normal historical margins, which we used to report at 13.5%, and that is quite possible FY25-26. Okay, and with MDO getting stabilized by FY26, we could see that the number may go up to 13.5% plus 26 onwards. So the first plan is to bring back our normal margins to 13.5 by FY26. So we'll see that every quarter there will be some gradual improvement in the margin profile. And on top of that, we have given a clear-cut instruction to our business development not to quote for any projects below threshold margin limits. Therefore, we are not rushing for projects for low margin just to build the order book. Okay, so that is also helping a great extent to add the quality orders and see that the margin profile is maintained.
So just a follow-up. So what is the current mix of their old projects? So how much of the order book would still have that old projects with higher royalty payments? And when do we expect this to complete?
This will settle down by FY25. So we could say another 25% to 35% in that range.
Sure, sir. Thank you very much. I have a few more questions, but I'll get back in the queue.
Yeah.
Thank you. The next question is from the line of Amit Vora. Please go ahead.
Good afternoon, gentlemen. Thanks for taking my question. Congrats on a very good set of numbers. Excuse me if I'm asking this again. The only thing is that you had mentioned that for completing the MBO project, there might be requirement for you to raise some debt as well, other than the equity that you have raised. So is there a plan to further raise any debt or no?
Yeah. So the first project, corporate Basan for KBP, which is a smaller size, okay, we have already tied up power finance cost of PFC 200 crore, 60 crores, which is a project specific, and the servicing will be done from that SPV. So that tie-up is already done. And for the second project, we need to set up the infrastructure. On top of that, we need to also build a washery plus coal handling plant, which is larger in size. So that is expected to be almost like 790 crores plus. So we have raised the equity, so we have sufficient equity. Having said that, we have lined up some debt part from our existing banks. Should we use or not, we'll take a call because the internal system itself throwing some surplus cash flow. Therefore, we wanted to use or not, probably we'll take a gradual call. Of course, the PFC part we'll use, but the second part, Tasra washery, we'll take a call gradually, sir. We'll take, if at all need this, but not at least for next 16 months. There will not be any increase of debt in the Tasra project.
Okay, that's great to know. Just one question. Now we are almost 1.5 months in Q3. So what is your estimation on the Adani project? Is there any, you did mention, but I'm just saying that because we are already there almost 1.5 months in Q3, what is the status there? Is there any possibility that, what kind of revenue booking can happen there?
See, Adani, as I stated, like quarter 3, maybe in the range of 50 to 150 crores, that's the maximum we can do quarter 3. We are working on that. We have spent some money. And out of the total packages, Udupi is quite active. So probably by FY24, the max what I'm expecting is 250 to 350 crores. That's to the package of Udupi we may book. Probably quarter 24 will be a quarter jump.
That's the second half total you are expecting between 300 to 400 crores. Is that correct estimation?
No, sir. For the entire year of FY24, I'm expecting in the range of 250 to 350 crores. Quarter 3 maybe in the range of 50 to 150 crores.
Okay. And last thing on exports. So order book that you have targeted and you have mentioned for 10,000 crores, this includes both domestic and exports, or it is only the domestic orders?
No, it's put together, sir. Export, we have not taken a larger target this year. The maximum what we are intending is maybe 250 to 300 crores. Of that, maybe 180 to 200 crores is O&M itself.
Oh, it's negligible, so that's not.
25, probably we may need to keep a larger target, but for this year we have kept a softer target.
Understood. Thank you. Thank you so much. All the questions have been answered. All the best.
Thank you, sir.
Thank you. The next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah. Good afternoon, sir. So when you were talking about the opportunity from the power sector from the new projects, you mentioned projects worth 5,270 megawatts from revival of projects is also there. So just my question is whether are these projects which have already been announced but were shelved due to various reasons now coming up again?
No, they are firmly firmed up. These are all well-regulated, what is that called, under incentive schemes which have come and then tendered and awarded. For example, JSW has taken their job in Orissa, then Meenakshi at Andhra Pradesh, Vedanta have taken it. And then, now that final rebidding has taken place for the Amarkantak 2 into 650, it is a tussle between Reliance. Earlier TFC was the L1 and now Reliance has given a better offer. Adani has given some better offer. Now, that way, most of this first stage of the project, or what I said about 5,000 plus megawatt, more or less everything is firmed up. Now, what I'm trying to say, that itself will have maybe half the job. It will have an investment of at least substantial investment. You can say easily about 15 to 20,000 crores overall investments, and then in that we will have a share of 4 to 5,000 crores, our opportunity size. Now coming to the second stance of these initiative projects, government has now elaborated that and saying that state GenCos and other companies also, state undertakings can also participate in that. That they publish the list of those projects also. That is also coming to substantial about 5 to 6,000 megawatts. Once it happens, that will add up to the more opportunities. Then that is what as far as this. I think government is very firm on this revival only because of the scare which has created that as a renewal element of the percentage of the power goes up, there can be huge disturbance of grid. They want to avoid that. That situation can anytime in the next 2 to 3 years. They want to fill up those gaps fast so that the base load operations are well established. All these ponds are available for day-night operation. Then the renewable power takes over for the bulk of the generation and all. So I think we are very clear on that. And that is why we are also seeing that the organization, the setups and the people, what we are having, we are keeping them. And we are focusing on these new projects also in a big way.
Okay, understood. My second question is, so of course you mentioned about the NTPC's new projects and this revival and the NCLT projects and other 10,000, but there is no mention of any project from state GenCos. Like, why is that the case? Are you seeing any state GenCos projects also in the pipeline?
Yeah, that is exactly. I think what our government has seen that why state government, for example, private sector is coming up. For example, Adani has taken over, Vedanta has taken over, Reliance also is bidding for remote contract. Then, JSW has taken the Odisha project of the IPP. And then JSL has taken over that Monetary Park. Now, what the government is saying, they want to enhance the basket of this one for the bidders, and that's where, I think this guideline has come just 1 month before. I have seen in the website of power industry, and it's a clear guideline issue, and they want to push these balanced projects also. I have got a list of projects. If required, I can share that separately.
Okay, maybe I will get in touch with you to get that for it. Actually, my question was regarding state GenCos, like say TAN GenCo or AP GenCo. These state GenCos are not coming up.
Yeah, exactly. What you are telling is exactly on that. Yeah, they have been prodded by the government to please participate.
Oh, you mean, okay, I understand.
Yeah, that is they issued a circular. They issued a specific circular for that.
Okay, sir, I will get in touch with you. Thank you so much.
If required, I will send you that.
Sure.
Thank you. A reminder to participants that you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to the management for closing comments. I would now like to hand the conference over to the management for closing comments. I would now like to hand the conference over to Mr. Prashil Gandhi for closing comments. On behalf of Nirmal Bang, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.